So, Nik, my role here today for all of the folks watching this video is to kind of get our arms around exactly what is Sharelord. So, in the eyes of a person for the first time, wanting to know a bit more information, how would you first say, what is Sharelord? How would you describe it?
The greatest cash flow strategy on the planet. And the reason why I say that is because it's consistent cash flow, but it's also very conservative at the same time too. But it's very simple to understand, to embrace, and look, anybody can actually utilize this to supplement the partner's income or also replace their own income too. So it's a phenomenal strategy in regards to generating cash flow, and that's why I like it.
So cash flow strategy, yet conservative, simple to execute. If I'm watching, I'm saying, how can that possibly be? That's an awful lot of things combined that would seem to make sort of the impossible dream from a cash flow perspective.
But the great thing is too, you're in control of this particular investment vehicle. I mean, look at the traditional way of investing in the stock market. Now, what does the typical traditional investor do? They buy a parcel of shares, they buy, pray and hope that the share price will do what?
Go up.
Go up. I mean,
Right.
Okay. Well, if it goes up, fine. But you may need to be invested like 10 or 20 years for that share price to go up, because
That's right.
shares don't go up at the same time. I mean, they may go sideways or even retreat back down the sidelines, I guess. But what I'm talking about is, a way of generating cash flow and not being reliant on just the capital appreciation of the stock.
Well, that's right. And of course, we all know that the stock has three possibilities. It can go down, sideways, do nothing, sit there, or go up.
Absolutely.
So actually only one out of three is in your favor,
And the thing
right?
is, why have 1/3 of an opportunity? I mean, I'd rather go down to Vegas and play roulette.
Right. Well, I don't know about that exactly, but
But I mean, I want control. In everything I do, I want control. And with this particular vehicle, with this particular strategy, it allows you to generate cash flow, not being dependent on just the capital appreciation, but doing something very, very unique and very savvy. And what I'm talking about is having a parcel of shares, and just like a landlord rents out their property to a tenant to receive what? Rental income. We can also do the same thing too, but now we are called Sharelords.
Sharelord. So that means you're the owner.
We're the owner of the shares, and we give somebody else the right, but not the obligation, to buy our shares. So what we're doing is this. We have a parcel of shares. Now, first of all, you need about 100 shares, which constitutes one contract.
100 shares equals one contract.
Absolutely.
Okay.
So let's say you have one contract of shares.
Yes.
We can basically write an option. We can actually rent out our shares and generate a cash flow premium. And let me explain a couple of things here. See, what we do is this. We're not the traders in this particular case. We're creating the market.
Now, what do you mean by that, sir?
Well, what we're doing is this. See, there are parts of the stock market. There are market participants. And what they do is actually speculate on the marketplace.
Right.
They're speculators. I mean, they're gamblers. I mean, really, why they're speculating, I have no idea. But they need somebody to provide them a contract in order for them to be a speculator.
But it seems like they're speculating because they're motivated by greed.
It is total greed.
Right. I mean, they're motivated by, I want to get a quick pop up.
They want to buy like an option contract, and with the hope of making 100% profit overnight. See,
Right.
I'm not in for the high speculative returns, because when you're using leverage, it's also a double-edged sword. See, what I
Right.
like is consistent, profitable cash flow, month in, month out. That is control.
Right.
And you can budget your life. And what I'm talking about is also, it's a phenomenal strategy because you can be anywhere remotely. And that's what I'm talking about in regards to having a true lifestyle.
Right. So let's talk about this. You have one contract, and is there a preset space inside the markets where you make it available to people, or how does that work?
I mean, you can rent out your shares on a monthly basis. You can create a contract off the back of your shares on a monthly basis. So, for example, let's say it's April, and I have some shares, and I'll actually just write an April contract on my shares. Now, the speculators, see, they don't really want to buy the share. First of all, they may not have the money. They may not have the money to buy the shares.
Right.
Or what they want to do is just utilize a contract with the hope of on selling it to somebody else to make a profit.
Right.
I mean, that's their reasoning. I mean, that's
Right.
very speculative, and there's no control of it, because really they have no idea whether they're going to make a profit or make a donation.
So I love the way you said that, make a profit or make a donation. Now let me make sure that I've got this right in layman's language, because it's beginning to make a lot more sense to me, and I just want to make sure that it makes sense to everybody that's watching the video. So these people buy the right, which is called, they purchase they give you a premium to purchase that contract.
To purchase the controlling right of your shares in this particular case.
Right. And the truth is that they never intend to really purchase the shares the majority of the time.
I mean, because all they want to do is they want to utilize the option contracts and then hope to on-sell to somebody else and make a profit. So, I mean, it's purely hope for them. What we're doing is, irrespective of any capital appreciation of the stock, we just want to utilize the actual stock itself, the option contract, for cash flow return.
Right. So, but let me just get back to this piece right here, because this is beginning to make sense to me, and yet it's a little bit confusing. People purchase the right, and what's that called when they buy that? When they buy the right from you you have a contract, you write a contract so that someone can come in and buy the right to purchase that. What's that called?
Basically, it's a cover call.
Okay.
So they're purchasing the right to buy your shares at any time in the future at a predetermined price.
Right. And assuming that the shares go up, and that there's now some value to what they purchased.
Then what they do is now they'll exercise and actually buy your shares.
Now, do they buy the shares, or do they just pass on that profit that they made to somebody else?
They'll basically exercise that right they bought initially when they paid you the rental income.
Right.
And they'll exercise and actually purchase those shares from you. Because, for example, let's say you bought the shares for like $19.50.
Right.
And you wrote a $20 contract.
Right.
And let's say at the end of the month the share price is now trading at $21.
Right.
Well, it's or they can buy the shares off you for $20 because you wrote the contract out at $20.
Right.
But on the marketplace, it's now worth $21.
Right.
So they will exercise their right to purchase your shares, which, I mean, for us, it doesn't really matter because from day one up front, we got paid what?
The premium.
We got paid cash flow premium. And in most cases, it's normally between 3 and 9%. I mean, we can generate that on a monthly basis. I mean, try annualizing that.
Right, because that's basically generating the same type of return that a bank is paying in interest for a whole year.
Absolutely.
On a monthly basis.
Yeah. And what we're doing now is this: if we do get exercise, what can we do now? We can buy another parcel of
shares.
That's right. To do what? To re-rent.
And there's no shortage of speculators, because there are a lot of people who don't have the capital to buy the block of shares that you then go rent out.
And there's so much liquidity out there in the market.